Hello everybody, and once again welcome to Sinhanomics, the money machine. The Wall Street has started rallying. Pretty much it's called the Santa rally, the year-end rally. And as you know, once the market starts rallying, all these analysts come out and they talk about further gains in the index. And so has happened now. Everybody has become very optimistic right now. And I'll start with Bank of America analyst. She is the equity and quant analyst, Savita Subramaniam. She has come out with a report saying that S&P 500 will hit 5,000 in year 2024. So that means she sees that further 500 to 600 points rally, which will be like 10 to 12% overall from today's index. And there has been plenty of arguments given for that. One is, of course, too many skunks at the garden party, Goldilocks economy, and the profits will go up when the economy will a little bit slow down. And that's what everybody is expecting right now, that the GDP will slightly slow down. It may not get into recession, but it will have a softer landing. Again, guys, don't forget, next year is the election year. So more gives, less takes. That's the story of everywhere in the world. And that's going to be repeated in USA as well. Again, US had some other advantages as well, like deglobalization, oil, US dollar, baby boomers, and you name that. Well, all these have been given as the argument by Savita Subramaniam, the equity and quant analyst, to justify her claim that S&P 500 will be hitting 5,000, or in other words, it will be crossing 5,000. Well, that's a good news for us. That's a good news for investors like us. Having said that, let's look at in the last 1 year. I mean, all these companies have done extremely good, and especially I'm talking about the Magnificent Seven guys. And there was kind of a glitch, and in the last month, in the month of, I would say, November, or middle of October till now, Nasdaq has rallied by almost 11 to 12%, and so has the other indices as well. But having said that, the leader of the pack, Nvidia, recently posted fantastic result for the Q3 2024, and it has actually beaten the market expectation on every front, be it the revenue, be it the earnings per share, be it the revenue for the data centers, etc. But having said that, still the market is a bit skeptical, because the market cannot believe that a company can perform so well. Its revenue has tripled, guys. Yes, it had a 206% increase year over year. And a company of this size, $1.25 trillion, and that's the market cap of Nvidia, can grow at this rapid pace? Nobody can imagine, and nobody is believing. So if the company is giving such a fantastic increase in the revenue and better than their own forecasts and better than the market expectations, there are skeptics out there who think that this is not going to be sustainable, and they are dumping the stock. They have not dumped the stock, but they have actually a little bit reduced the valuation. It was trading at around $504, and now it's around $480, $477. So $10, $20 down. Why? Let's look at that. So today we'll first look at the results overall, and then we'll look at the different business segments like the data center, gaming, automotive, etc. And then we'll do some more analysis and see what the price targets have been by the street analysts. Great. Well, Nvidia actually, as I told, the revenue has tripled to $18.12 billion. Versus the market expectation of $16.18 billion, guys. I'll repeat that. It's 206% growth year over year. Fantastic growth. The non-GAAP EPS, the earning per share, was $4.02 as compared to $3.38. That's a 63 cents per share beat. I have not seen this kind of beat in the earning per share in the last 5 to 10 years. Well, if you look at the data center revenue, that was at record as well. It closed at $14.51 billion, and that was 14%, 14% sequentially quarter over quarter, and year over year that was a whopping 279% growth, guys. Yes, you heard that right. Again, from the net income perspective, $9.29 billion. From the earning per share, the per share perspective is $3.71, and that was as compared to 680 million. Yes, remember, 9.29 billion versus 680 million last year. And when you look at the per share, it's $3.71 per share net income as compared to just 27 cents a year ago. That's the story of Nvidia. And the market is not feeling excited about it. Guys, this is a lifetime opportunity to accumulate this kind of stocks. Well, there has been some certain key reasons as well for the market's disappointment, I would call it, or a little bit of a muted excitement. Let's look at that. Number one, as I mentioned, too fast growth puts many of the skeptics to think that is this growth going to be sustainable? Again, US export restrictions on China will definitely impact the Q4 revenue, and to a large extent as of today it's something around 20% of the total revenue that's coming from China, and that will be a little bit impacted as well. Having said that, the management has already indicated that whatever decline they are going to see from the China, that will be offset by the increase coming from other countries like Australia, India and other places, and I'll cover that a little bit later as well. And last but not the least, many of these hyperscalers like Microsoft and Google, Amazon, all of them are actually trying to create their own chips. Tesla is no exception. Tesla is also creating their own chip as well. Right now, all of them are buying it from Nvidia. So many analysts think that that will little bit dampen the profit margin as well as the revenue for Nvidia. So from the outlook perspective, actually Nvidia has given fantastic outlook as well. So the revenue is expected in Q4 to be $20 billion, plus minus 2%. And the GAAP and non-GAAP gross margins are expected to be in between 74.5 to 75.5%, guys, plus minus 50 basis points. With that, let me tell you that the margin in Q3 was pretty much around 74%. So can you believe that? The company who is tripling the revenue in a year's time and operating at a gross margin of 70 to 75% is trading at a price earning ratio, forward looking price earning ratio of just 46. And if you factor one more years of growth, so for 2025, if you look at that, it's pretty much trading at around 25 PE. I personally feel that this is fantastic. If you compare this with Apple, a $3 trillion company, giving a single digit growth, is trading at 28 to 29 price earning ratio. So Nvidia from that perspective looks pretty cheap to me right now. Having said that, guys, let's look at some of the things that Nvidia has announced as well. So it actually announced the GH200 GPU with a higher memory, much higher memory, as well as the additional ARMS processor on board. So as I mentioned, the memory is much higher than H100. And again, as I was mentioning, that many other countries are actually purchasing that. And one of the example they cited was Australia-based Iris Energy. It's an owner of the Bitcoin mining data centers. They have actually purchased 248 H100. Yes, you heard that right. 248 H100 at $10 billion. Guys, think about it. That makes the price of one H100 as 40,000 US dollar. That is the price of a chip Nvidia is producing. Again, GPU demand continues to outpace the supply as the applications is broadening in many of the countries. And the impact of the certain countries like China especially, which I highlighted earlier as well, is going to be offset by other countries like Australia, India, and a lot of other countries in Europe as well, who all of them want to have their own AI facilities actually. Well, right now Nvidia maintains a market share of greater than 85% in the generative AI space, especially in the chip side. And that's going, they're going to contain that, they're going to maintain that. That's what many of the analysts think. Well, large language model startups, consumer internet companies, and the global cloud service providers were the first movers. And the next wave is starting to build right now from the nations, and the regional CSPs are actually investing in the AI to serve the local demand. And Nvidia sees the demand coming from that side, especially in the enterprise software companies are adding a lot of AI co-pilots and assistants to their platforms. Nvidia GPU, CPU, networking, AI foundry services, and Nvidia AI enterprise software are all the growth engines in full throttle. The era of the generative AI is taking off, guys, and that's what Jensen Huang just said. So people should not see that in a closed silo, but they should see that it's actually the expanding universe. AI on one hand is expanding, and who is the market leader here? With 85% market share, guys, is just Nvidia. With that, let's look at it at certain segments as well, like the data. We'll start with the data center. As I talked about it, the third quarter revenue was pretty much $14.51 billion. And that was 41% higher than Q2 sequentially, and 279% higher than last year. Well, it also announced that Nvidia HGX H200 with the new Nvidia H200 Tensor Core GPU, the first GPU with the HP M3E memory. And as I mentioned earlier as well, it does have ARMS processor on board. It also introduced AI foundry services with Nvidia AI foundation models. It also announced the Nvidia Spectrum X. Last but not the least, it did talk about the Nvidia H200 Grace Hopper. So plenty of this. In fact, Nvidia had a cycle of 18 to 24 months for their refresh, but now they have reduced it down to 9 to 12 month refresh cycle. And that shows that this company is continuing to focus on the innovation. Data center made advances with the global cloud service providers. So Google Cloud Provider made generally available their new A3 instances powered by Nvidia H100 Tensor Core GPUs. Microsoft Azure will be offering the customers the access to Nvidia Omniverse cloud services for accelerating the automotive digitization, as well as the new instances featuring NVL-H100 Tensor Core GPUs. Oracle Cloud Infrastructure made Nvidia DGX Cloud and Nvidia AI Enterprise software available in Oracle Cloud Marketplace. Not only that, Nvidia has now partnered with a range of leading companies who are focusing on the AI initiatives, and those companies include Mdocs, Dropbox, Foxconn, Infosys, Lenovo, Reliance in India, Tata Group, etc., etc., etc. So as I had told earlier, that a lot of analysts think that China will make a big dent there, but guys, look at it. It's expanding its horizon to other countries, and majority of that are the companies with the leading AI initiative companies. Gaming, that's another area. So third quarter revenue was $2.86 billion. Of course, much lower than the data center, but $2.86 billion means it's a 15% up from the previous quarter and almost 81% higher year-over-year growth, guys. It launched DLSS 3.5 ray reconstruction, which actually creates very high quality ray traced images for intensive ray traced games and applications. It also released the Tensor RT LLMs for the Windows. Well, without getting into too much details from the technical perspective, let's focus on the financials, and the bottom line is that the growth has been fantastic. Year over year, the gaming revenue is growing at 81%. Professional visualization, the third quarter revenue was $416 million. It's a smaller business, by the way. Having said that, that was 10% up sequentially and 108% up year over year. It also announced Mercedes-Benz using Nvidia Omniverse to create the digital twins to help the plan, design, build and operate its manufacturing and assembly facilities around the world. It also announced new line of the desktop workstations with Nvidia RTX 600 ADA generation GPUs and Nvidia Connect X smart interface cards for training smaller AI models. So smaller, but is growing pretty fast. When we look at the last component, which is the automotive, the third quarter revenue was $261 million. That was 3% up sequentially and 4% up a year ago. So automotive in the segment, I personally feel is not doing great, frankly. Having said that, they furthered its collaboration with Foxconn to develop the next generation electric vehicles for the global market. And Nvidia Drive Hyperion and the Nvidia Drive Thor systems on the chip are its main components. And we all know that the giant Tesla is a big client for the Dojo supercomputer and all those as well. So that was pretty much the analysis of all the different segments of Nvidia. Now let's look at some of the analysis we want to do and what the analysts think about it. Raymond James, Srini Pajuri and the Jacob Silverman, they actually wrote recently with an outperform rating. They wrote that we are not overly concerned about the competition and expect Nvidia to maintain its greater than 85% market share in the calendar 2024. Again, let me remind you, which I had talked about earlier as well, the investment firm Rosenblatt likes Nvidia so much, they have the highest price target on the street. And guess what? In the last quarter itself, they actually raised their price target from 800 to 1100. Yes, you heard that right. Rosenblatt has a price target of 1100 for Nvidia. And that's for 1 year target, guys. And with that, if we little bit compare what the other analysts are actually giving the price target for that, the highest, as I mentioned, is Rosenblatt, 1100. The median is something like 642. I'd like to highlight as well that Dan Ives of Wedbush has a price target of 690. The lowest so far in the industry, out of 45 to 50 of them, is around 535, and average is $666. Well, the highest target is 1100, median is 642, and the average is 666. So if you compare that with the close of Friday, that was 477, there is a huge room of improvement in the next 1 year. So guys, these prices offer a lifetime opportunity for investors like us and you to accumulate this stock. So if you don't have this stock in your portfolio and you are still a skeptic and think that the artificial intelligence and generative AI is a hype, it's time to reconsider. This is for real. Think about it. Having said that, all these are my personal opinion, and don't forget to consult your financial advisor before making any investment decisions. Synonomics is out there to create financial awareness so that you can understand the companies you want to invest in, analyze them, invest and make money. With that, if you like this kind of videos, don't forget to like, share and subscribe. I'll come back again with another interesting episode. There has been a lot of things happening in the marketplace, like the drama just had with the OpenAI, Altman and the Microsoft. I'll cover that in the Microsoft, because if you look at from the AI space, in the hardware side, in the chip industry is Nvidia, but from the software perspective, from the application side, Microsoft is the giant guys. I'll cover that in my next video or other videos very soon. So stay invested, happy investing, and it's a goodbye from your finance coach, Pankaj Sinha. Bye-bye.